Hello, welcome to my channel today, The King's Tutor. It's the first time of joining us. Thank you for joining us. Ensure you like, comment, and subscribe to our channel so that you see more of this content. Okay? And if you're a returning subscriber, thank you very much for your support so far. Now, we want to see a consignment account. Okay? A consignment account is one of the most popular topic. Definitely is a popular demand by most of my subscribers. Okay? Now, what is consignment? We may proceed. Now, consignment refers to a process whereby an individual known as the consignor sends goods to another individual known as the consignee for the consignee to receive those goods and sell on his behalf. Okay, now basically an individual or a trader might want to sell his goods in other location. That is basically one of the advantage of most of the trader. They might see their goods as an important commodity to be sold in other location. So they might not want to open branches in those locations. So what they tend to do most time is to get an individual that is resident in those locations to sell those goods on their behalf. Okay, now this process is what we call consignment, and the account prepared for this purpose is called the what? Consignment account. Okay, the process whereby goods are sent by the principal. We call that person the consignor, or what we call the principal. Consignor or the principal, he sends goods to another individual who is known as what we call the consignee or the agent. Okay, for the agent to sell these goods on his behalf. Okay, for what? For commission. Okay, now the consignment account relates to situation whereby traders might, as I said before, might want to sell their goods, but they don't want to open branch in those location. Okay, now when this consignor sends goods to the consignee will have to receive the goods and sell and refund back the amount sold, and in terms of what we call sales, we'll get to that. Okay, so the consignee, who is an agent, may decide to sell most of the items on credit, but before he does that, he has to make an undertaking that if there is any loss as regards bad debt, he might have to pay. Okay, he might have to indemnify the principal, who is called a consignor. Okay, so this type of agent receive extra commission in what we call the credit commission. The credit commission. Okay, an agent that promises to indemnify the principal should in case a loss happens. Okay, so the agent may decide to sell on credit. Now, there are some terms you need to note before we proceed. The most time I like using illustration to solve questions with as regards what I did in that joint venture. Okay, so there are some terms that are important. The first one, I said it, the consignor. Another one, the consignee. The third one is what we call account sales. And the fourth one is pro forma invoice. I'm going to explain these terms because as we proceed, you'll be hearing most of these things so that you are conversant with this. Now, the consignor, as I've said earlier on, is the principal, the owner of the goods that send the goods to another person. Okay, so the consignor is the owner, the principal. Okay, while the consignee is that individual in another location that received the goods on behalf of the consignor. Okay, so the consignee is known as the agent. Okay, is known as the agent. He received the goods on behalf of the principal to sell for a commission. So the account sales. Now, what is account sales? Now, after the consignor must have sent the goods to the consignee, and the consignee will have to receive the goods, store them, and sell. Now, After he must have sold those goods, that there might be some expenses he might have incurred while selling those goods. Call those things selling expenses. And most of them might be landing charges, most of them might be carriage outward, it might also be commission, because before he send back the money, he has to remove his own commission. Okay, now the account sales refers to a periodic statement sent by the consignee to the consignor that comprises of the sales he has made, the expenses he incurred, the commission he has received, and the balance that is due to the consignor. Now, what does this mean? It means that if the consignee must have received the goods, he stored them and sold them, he might have incurred expenses, and also he has to remove his commission. So, all statement that comprises of all the sales he has made, the expenses he has incurred, his commission, and the balance that is remaining, he has to send them in a statement back to the consignor, because he is not the owner of the goods, he is the consignor. So once he has received the goods, he made those sales, incur expenses. Now the statement, the balance remaining, everything will be put together and sent back to the consignor. That statement is what we call account sales. The statement, periodic statement that contains the sales made by the consignee, the expenses they incurred, his commission, and also the balance that is due to the consignor. He has to send it back. That's what we call what? Account sales. Okay. Another one is pro forma invoice. The pro forma invoice is an invoice that shows the quantity of the goods and the price and also the value. Now, most times the consignor sends his goods with what we call pro forma invoice. Now, this invoice will indicate that no charge will be made on the recipient. That is, when the consignee is receiving a goods, there will be no charge made to him. Okay, that means the consignor will have to pay some charges like duties, export duties. Okay, so that's what we call pro forma invoice. So, in terms of consignment account, the consignor will have to prepare his own book of account, while the consignee also prepares his own. So the two books of account that is relevant in consignment account is recorded one in consignor's book and also in the consignee's book. The principal sending it will have to prepare his account, while the consignee receiving also has to prepare his own account. Okay, so these are two basically what people preparing account. So we're going to see from the first one, in the consignor's book now, what are the accounts that are what supposed to be prepared under the consignor. That is, the consignor, I've said, is the one sending the goods. Okay, now in the consignor's book now, in the consignor's book, the accounts that are important that you should be conversant with, so we're going to see that you should take cognizance of, is one, what we call consignment account. Two is called goods on consignment account, or goods on consignment outward account. Three is the consignee account. Four is the bank or the cash account. And five is the bills receivable account. Now, these five accounts, you should take cognizance of them while you're preparing in the consignor's book. That's the owner of the goods, his book. Okay, so we're going to see them one after the other and how it relates to what we are doing. Okay, now I'm going to use illustration to show how all this will be done. Now, when the consignor sends goods to the consignee, Once he sent the goods now, you are going to open, it's going to affect two accounts as regards our double entry principle. One account will be credited and another debited. Now, once he sent the goods, because that's the first stage, that's the first process, okay, he has to send the goods. And once he sent the goods, now you open the goods, you open the consignment account, and the goods on consignment account. Now, once the consignor send the goods, please, I would advise you watch till the end. When you get to the end, there's something I'm going to tell you. Okay, ensure you watch to the end of this so I don't skip it. I don't want this video to be long, but I have to explain in detail so that you have to understand what I'm saying. Now, once the consignor send goods, okay, now that credit entry, the goods on consignment account will be what credited with the amount of the goods, because it is going out. The goods on consignment will be what credited. So if he send goods worth of let's say 100,000, so right here consignment 100,000, and the corresponding entry comes to consignment account. That's the goods on consignment 100,000. Now, that is when he sends the goods. Now, when he sends the goods, he might also pay some expenses. That's, remember when we talked about pro forma invoice, that no charge will be made to the recipient. So, in sending the goods, the consignor might incur some expenses. When there's expenses incurred in sending the goods, for example, like export duty, definitely what you have to do also, once the payment is made for that expenses, you open a bank account, a bank or cash account. It is credited with the amount. So you're going to write, if it is the name of the expenses, if it is duty, let's say 1,000, and the corresponding entry comes to the debit side of the consignment account. All right, duty 1,000. Now the consignment account basically is where all entries is supposed to be made. All entries, you record the debit side the expenses related to this account, and also on the credit side the income that comes to the account and unsold stock. We'll get there. So we said when they send goods, that's the first stage. When the consignor send goods, the goods on consignment account is credited, while the consignment account is debited with the same amount. The same way, if there's expenses that is attached to the selling of that goods, if it was paid, the bank account is credited, while the consignment account is also what debited. Now, once he has sent the goods now, no other entry will be made by him. He has to wait. Why? That is where his own process stops. It is now remaining for the consignee to receive the goods, store them, and sell. Okay? Now, once he received the goods, store them and sell, and made other expenses, he has to was sent back in terms of account sales. You see, the statement account sales is coming again. That was what I explained earlier on. It says it was a periodic statement sent by the what? Sent by the consignee to the consignor, showing sales made, expenses incurred, commission, and the balance that is due to the consignor. So when the consignor has sent the goods and made necessary expenses in terms of selling the goods, he has to wait to receive account sales for the consignee to make other recording. So once the consignee has received the goods, store them, sell them, and remove his commission, and is now sending back the balance in terms of what we call account sales. Now, when the account sales has gotten now to the consignor's account, now if there is a sales made, remember our consignment account goes on consignment account, the bank account. Now, if sales is made when he has received account sales now. If sales is made, what we're going to do is he is going to open an account on behalf of the consignee. That is why it is there. Okay, so he's going to open an account on behalf of the consignee. So have consignee account. Now, when sales is made, if sales is made when he has received account sales, it should be debited to the consignee account. Okay, because he's the one sending it, and once he made sales, it's supposed to be debited to his account. So we'll write sales. If it is 200,000, okay, while the corresponding entry goes to the credit side of the consignment account in terms of sales. So we'll have sales 200,000. Okay, so that is when sales is made. Now, if while selling, we're talking about the account sales now, the items there. Now, if while selling, the consignee incurred expenses, which can be carried outward or landing charges. Okay, so if he incurred expenses, it should be credited to the consignee account now. Let's say he paid landing charge of 5,000, and also let's say carried outward of 3,000, and also his commission, because he has to deduct his commission before sending the money back, the balance. So the commission, let's say 2,000. Now all those expenses is credited to the consignee account, and the corresponding entry will come to the debit side of the consignment account. The debit side of the consignment account. So we'll now write landing charge. Landing charge is 5,000. Carried outward 3,000. Commission 2,000. Now that is the expenses. Now the balance, they have to be what? Balance that is remaining. Okay, the balance that is due to the consignor. Now we are still talking about the items in the account sales. Okay, the balance that is due to the consignor. Okay, so the balance, if it is to be paid immediately, if it is paid by cash or bank, definitely the balance will be here by bank, so that it balanced automatically. So 200,000, 5, 3, 2, that is 10,000. So what will be here will be 190,000. That is 200. That is 200. It balanced automatically. So the corresponding entry, because he has to pay, this is the balance that is due to the consignor. Because he has to pay this. Okay, so if he is paying this now, the corresponding entry comes to what? The bank account, which is debit. So the bank account now, we have the name of the consignee as 190,000. Okay, now, but if he is not paying immediately, if he's not paying to the bank account, or he's not giving cash, okay, definitely he has to what? Probably he's owing the balance. He has to what? To write a bill. He has to write a bill that is recording that he is indebted to the what? Consignor. So that bill now, the balance is what will now what? Prompt to what? The bill receivable what? Account. So you see that they are interchangeable. If he's not what? Paying bank, he's not paying immediately, it has to what? To be what? Posted to what? The bills receivable account. Okay, so when that happens now, you now see that he has received the account sales. That's the consignor. So he now knows the sales that was made. He has recorded it in the consignee account. The corresponding entry comes here. The expenses that was incurred, the landing charge carried outward, he has recorded it, and the consignee commission, because definitely the consignee does not receive salary from the consignor. What he received in terms of his entitlement is what we call commission, based on the sales made. So the commission is 2,000, also recorded there as well in terms of the expenses. Okay, so that is all you have to now what? Balance the what? The account. Now But in some situation, they are what we call unsold stock. We call that closing stock in terms of this. And those unsold stock are the stock that are what? Not sold. The consignee returned it back. Now, what do I mean by that? For instance, while the consignor was sending, he sent, let's say, 100, 200, let's say, bags of rice. And what the consignee sold was just 180. It means that 20 was what? Unsold. Okay? He sent 200, that's a consignor, to the consignee, and the consignee returned 20. It means he sold 180 and 20 is what? Unsold. Now, how do we trade this unsold stock? We call it what? Closing stock in terms of the consignment account. Now, how do we do this? Now, the cost of this unsold stock and its related expenses will be credited to the consignment account. Let me repeat. The cost of the unsold stock with its related expenses will be credited to the what? Consignment account. Please, you have to be careful with this. You have to ensure you are careful with this. Why? Because most time they might tell you that they send this particular quantity and this quantity was sold. They will not tell you it is unsold. They will just tell you this quantity was sold. It means this 20 that is remaining is what? Unsold. Okay? You have to be very attentive when it comes to that. So when it happens like that, we have a formula that we're going to use. That is why I said you should watch up to this point. This is what is important. So we have a formula that we are going to use to get that closing stock. We call it closing stock. So the formula is to get the closing stock. Remember we said the unsold stock with the cost of the unsold stock with its related expenses, excluding selling expenses. Excluding selling expenses. Now, why are we excluding selling expenses? We called it unsold. It means we have not sold it. So any selling expenses should not be related to it. Selling expenses, for example, commission. Commission is supposed to be on sales. Supposed to be on the goods you have sold, not on the one you have not sold. So commission will not be added to it. Okay? So the apportion will be now on the unsold quantity over total quantity times amount of goods consigned plus expenses. Okay? Unsold quantity, that's how many was unsold. And even with that illustration I made, it was 20. So it will be 20 over the total quantity that was sent over 100 and 200 if 200 was sent times the amount of the goods consigned. The amount, that's the cost of the goods that was consigned. We put there plus expenses. The expenses that was attached to it. Now these expenses now will include all the expenses here, excluding the selling expenses, which is commission. Remember, selling expenses is supposed to be on those goods you have sold. But now we're talking about unsold. Okay, so meaning that these unsold attached to those expenses, including the duty, because we made our expenses on all of them, landing charge carried outward, but not on commission, because commission is what is selling expenses. Okay, so we're going to add all this, which will be our expenses now. The amount of goods that was sent, the amount, which is the goods on consignment, the amount that was sent. Now, unsold quantity over the total quantity times amount of goods plus expenses. Now, the amount you have here is what will come here. You can write it closing stock or write it balance carried down. It's either it is written as closing stock or balance carried down. Then we put the amount here. Let's say the amount is 10,000. Okay, to be credited to the consignment account. So with that now, that's all. So we just balance now we have this will give us 210,000. Now, for sure, if this credit side, watch, if this credit side is greater than here, so the balance will go to the profit or loss. It means there was profit. Remember, I told you the consignment account is where all major account, majorly it is called the profit or loss account in terms of the consignment. Okay, because this is where you record both the expenses and the income that comes to that consignment. Okay, so you add up this. Now you add up this. These are the expenses. Deduct it from the total. Now, if we have 100, this is 5, 8, 10, 11. It's 111,000 minus, let's say, 210,000 minus 111. So it is remaining what? 99,000. So this 99,000 is a profit which will be posted to the general profit or loss account. Okay. Now look up. This goes on consignment account. Remember this. We are going to close this account. The closing will be close to the trading account. We'll close it to the trading account, 100,000. We'll close it to the trading account. Now this we are going to just get the balance carried down. That's 189,000. Close it as 190. Close this as 190. That's for bank. Okay. Why the consignee account balancing automatically? Remember, we are going to post this consignment, this profit or loss, to the general profit or loss account. So you just open the profit or loss account, and post this to the consignment as 99,000. Okay, and this also was posted close to the trading account. So we're gonna post this also to the trading account as 100,000. So we're gonna write goes on consignment 100,000. Okay, so that's how to prepare basically. You see the books that we talked about now. All this recording are in the consignor, the owner of the goods, the principal. The consignment account, look at it, the goods on consignment, the consignee account, the bank, the cash account. Okay, so that's how to basically record. Now remember, before I go, this closing stock, remember this closing stock, the balance carried down, that was unsold with its expenses. I was using this formula. Now this closing stock will be sent to the balance sheet. Supposing you're preparing as regards combination with balance sheet, will be sent to the balance sheet as what we call the closing stock that will go to the what? Current asset. Okay, and also, had it been this consignee, this bank will go to our current asset also. But if it was not paid, if it was bills receivable, it will go as what? Debtors. Okay, so that is basically how to prepare the consignment account. Okay, so this is the illustration I normally use. Okay, so if for instance this illustration you don't get it and you want us to know where to post debit and credit. Now let's say for instance, now most times you don't just watch video once, you watch it over and over again to get what we are saying. Okay, now let's say for instance, in terms of what we did in terms of illustration, we want to know the debit and credit, the account of debit and account of credit. That is the bookkeeping entries. The bookkeeping entries. Also, in terms of the consignment account, now the first stage we said when there's dispatch, that's the first step. When there's dispatch, when the consignor send goes, so we'll call it a dispatch of goods. A dispatch of goods. Two accounts is affected. Now, once the consignor send the goods, it means now you have to you have the consignment account that will be affected, and also the goods on consignment. Okay, now the consignment account will be debited, while the goods on consignment account will be credited. Remember, I said the first step is when the consignor sends the goods. Now, when he's sending the goods, the consignment account will be debited, which is this, and the goods on consignment will be credited, which is this. Okay, that's the first stage. And also, if there's expenses on dispatch of goods, that's if there's expenses on dispatch of goods, so that's when there's expenses on dispatch of goods. Now it will not be consignment account and bank or cash account. So you debit consignment account and you credit the cash if it was paid. Okay, so this is where the consignor would have to stop and wait. When you are sending it, the consignor will have to receive it, okay, sell it, and make all necessary expenses and remove his commission, and send back in terms of what we call account sales. Remember that, okay? So when he send back the account sales, so that is sales. When there is sales as per account sales. Remember, we say account sales is a periodic statement that is sent. Okay, so when there is sales made, so the consignment account will be debited, while the consignee personal account will be what? Sorry, when there is sales, consignment account will be credited, while the consignee personal account will be what? Debited. Okay, when there is what? Sales, as per account sales. So that is when there is sales. Also, when the consignee incurred expenses in terms of selling it, when it incurred expenses in terms of as per account sales. If it incurs expenses, the two accounts that is affected in this now will now be the consignment account and the consignee personal account. So the consignment accounts now will be debited. You see it here. While the consignee personal account will be what? Credited. Okay. And also when there's commission is also part of the expenses. When there's commission, you debit consignment account and you credit consignee personal account. Should be credited. Okay, so these are basically the bookkeeping entries that is as regards this. Okay, so also if there's unsold stock, you just credit it to the consignment account. Credit it to the one consignment account. Okay, so that's how you do this. When there's dispatch of goods, when the consignor sends goods, you debit the consignment account, credit the goods on consignment account. When there's expenses on sending the goods, you what? Debit the consignment account and you credit bank account if it was paid. Now he has to wait for the consignee to send account. When the consignee send account sales, when there is sales, you credit the consignment account, you debit the consignee personal account. When there's expenses that follows account sales, you debit the consignment account, you credit consignee personal account. When there's commission, you debit consignment account, credit consignee personal account. Okay, and if there's also stock, credit the consignment account using the formula I showed you. Okay, the formula, that's we call it closing stock, which is the unsold quantity, the unsold quantity divided by the total quantity that was sent, plus the amount of the goods that was sent, the cost of the goods that was sent, plus the expenses relating to it, excluding selling expenses, excluding selling expenses, which is commission. Okay, so thank you for staying up to this point. And also, what I want to show you is, please remember this is just for recording in terms of the consignor, the owner of the goods, the principal. We've not entered the consignee. Okay, these are the entries. So I would want to take an example on this. But before I do that, I want to know your response. Ensure you like is when I say like on this video, and comment below. The King's Tutor, we need the example. The King's Tutor, we need the example. Comment it below in my YouTube channel. Then it will make me to what? To do that of the example, to see this typically before I enter that of recording the consignment. Okay, so what will make me to know that you guys are following is when I see that, so that we can see typical example and not this illustration. Okay, so I want to treat an example typically in that. So just comment below the King's Tutor, show me the example, or the King's Tutor, we need the example. Okay, and like this video so that we can reach more students. Share to your classmates, your colleagues. Okay, thank you very much.